Good afternoon, everybody. Thank you for coming. My name is Daniel Bunn, and I'm Director of Global Projects at the Tax Foundation. Tax Foundation is a policy think tank based here in DC, and our goal is to improve lives through tax policies that lead to greater economic growth and opportunity. And today we are going to be talking about excise taxes. Excise taxes are applied to items as diverse as alcohol, medical devices, gasoline, and indoor tanning, and are an important tool in a federal policymaker's toolkit. They're designed generally as a narrow tax on consumption, generally to remediate an externality or to approximate a user fee, and excise taxes are often looked at as a way for policymakers to pay for desired spending or other tax changes. And today we're going to cover the best way to levy federal excise taxes, recent and anticipated changes in excise tax policy, and excise tax reforms that policymakers should consider. For this discussion, we have three great panelists today. My colleague, Nicole Kaeding, who is Vice President of Federal and Special Projects at the Tax Foundation, where she researches federal and state tax issues. Nicole has testified or presented to officials in 17 different states and has experience testifying before Congress, most recently in Ways and Means Committee on the SALT deduction, state and local tax deduction. Nicole has previously worked in other think tanks focused on public policy. Also, we have Marron, who is an Institute Fellow and Director of Economic Policy Initiatives at the Urban Institute. He conducts research on tax policy and federal budgeting and testifies frequently before Congress. And before joining Urban, Donald served in senior government positions, including as a member of the President's Council of Economic Advisors and acting director of the Congressional Budget Office. Finally, we have Brandon Arnold, who is the Executive Vice President of the National Taxpayers Union. He has testified on fiscal policy before Congress and numerous state legislative committees. Brandon joined NTU in 2012 after working on policy at the congressional and state level and in roles at think tanks and political organizations. So we're going to let Nicole kick us off, and then we'll hear from our other two panelists.
Thank you, Daniel, and thanks everyone for joining us today. So I'm going to kind of get the conversation started, giving a little bit of background on excise taxes and their role in the federal revenue toolkit, walk through some of the theory of taxation as it relates to excise taxes, why do we use excise taxes, and then also talk a little bit about how we're starting to perhaps move away from that conversation on the use of excise taxes. So excise taxes are one of the things the federal government does to pay for the services that it provides. If we look at the Congressional Budget Office baseline over the next decade, excise taxes represent about 3% of federal revenues. And as Daniel mentioned, we charge them on a number of different things: alcohol, tobacco, medical devices, though that tax is currently suspended, tanning services, we have an excise tax on gasoline, we have lots of different excise taxes at the federal level. So the question is, why do we assess excise taxes? So let's first talk a little bit about the general theory of taxation. Why do we have taxes at all? And the reason why we have taxes is to pay for essential government services. Now, there are a lot of debates in this town and in this building about what are essential government services. But we're going to put that aside, because the role of taxation is to pay for whatever the folks over here decide they want to provide to constituents and residents. And we as a society understand that there's going to be a bit of a loss in economic efficiency because we need to pay for those services. Excise taxes take that a step further. In general, we think about consumers as being reactive to prices. Everyone is always trying to maximize their well-being as an economist, and that's what I call it, given their budget constraints. So for whatever amount of money you have, you want to try to create the best basket of goods and services that you buy on a given year. And what an excise tax does, though, is that it raises the price of that good. So consumers will react by shifting their behavior. Maybe they buy less. Maybe they switch to another good. Maybe they don't buy it at all. Producers switch their behavior as well. They might move resources from the taxed good to the untaxed good. But why would we do that? We do that because we're saying that for some reason the price of that product that the consumer faces is a false price. It doesn't actually account for all of the things that it should account for. And that's because there's some sort of cost to that item that society in general bears. We call that an externality. And so what we're trying to do is raise the price of that good to internalize the cost of that externality that's being posed to society. The prototypical example used in every economic textbook is pollution. By taxing pollution, there's a cost to there's a societal cost to pollution. By taxing it, those engaged in that transaction are going to bear more of that cost that they're putting on everyone else. But what that means for excise taxation then, if we're going to accept this argument about externalities, is that we should be also considering the risk, i.e. the externality of those goods. So take the example of tobacco, for instance. Not all tobacco products have the same level of harm. The harm caused from a cigarette, for instance, is different from the harm caused by vaping, according to the medical literature that's been developing on this topic. So what you should do is that the excise tax should be different for those two goods. The vapor product should not be taxed as heavily as the cigarette. Now, this can be difficult to do. One, it's difficult to actually measure the externality. How much of an externality is there? Now, we have a lot of econometric techniques we can do this, but it's just a difficult thing to accomplish. Second, how do you measure if you've actually been effective in internalizing the externality that's been caused? And then, how do you handle that some individuals engaging with that product might pose more risk than others? Consider the example of someone who drinks a glass of wine a week versus someone who drinks quite heavily. That risk is different. So how do you incorporate that into the setting up of the excise tax? This is difficult. The second idea as to why we might have an excise tax is this concept of user pay. There is an argument to be made that those that use the government service should pay for the government service. And excise taxes can be effective in trying to align that. The example I have in my mind here is the gasoline tax. We assess excise taxes on gasoline at the federal level and the state level because it's a good proxy for road usage. Now, it's not perfect. We've seen a lot of issues with the excise tax on gasoline, particularly as vehicles have become more fuel efficient. You're not having to put as much gasoline into your car, and how do you handle the fact that someone driving an electric vehicle might not use any gasoline or just a very small portion of it if there's a backup in their car, to someone who drives every day using traditional gasoline. But it's a pretty good proxy. People who buy gasoline drive on the roads. So we will sometimes use it in that sort of sense as well, in addition to the externality argument, that you can also make an externality on gasoline, but I won't right now. But that's the two reasons we kind of use excise taxes. But I'd argue that all that I've just said is not really how the debate happens, I think, most of the time when it comes to excise taxes. Instead, what we see at the federal level, and we've seen at the state and the local level as well, is that excise taxes are seen as just an easy way to generate revenue. They're an easy pot of money because they tend to represent items that are not as politically palatable. And so it's been a source of, well, I can just go tax this thing that's considered bad. Because it's much easier to do that than raise an income tax, for instance. And that comes with concerns. One, it violates the idea of why you would have the excise tax in general. And then two, and we'll talk a bit this, I'm sure, in Q&A, is that we introduce some mismatching between revenue streams and government service. The idea of the excise taxes relates to externality is that we're trying to get rid of this bad, right? We don't want people to undertake this activity. Well, if we're successful, then we actually should expect revenues to fall because people will be less likely to undertake this activity we've said is harmful. That poses a challenge, though, if you're going to use that revenue to fund some sort of government service. We've seen this a lot, particularly at the state and local level, where some sort of excise tax proposal has been paired with paying for a program, say universal pre-K. We end up with a revenue mismatch. So that's really one of the dangers we should be thinking about as we think about excise taxation. So with that, I will go ahead and stop, and I'll turn it over to Donald.
Great, thanks. So pleasure to be here. Glad so many people on a beautiful Friday afternoon want to talk excise taxes, which may seem a little nerdly, but is really important. So as said, I'm with the Urban Institute. If you're not familiar with us, we are a very large nonpartisan research organization here in Washington, about 500 researchers. Almost any domestic economic and social policy issue you're interested in, please check us out. Justice, health, and of course, tax policy. Our tax policy does an enormous amount of work on all aspects of the tax system, including excise taxes. I think it's important when you're discussing excise taxes to think about both the ones that exist today and the ones that people are thinking about introducing. So existing today, famous ones are gasoline tax, alcohol tax, tobacco tax. There's a whole long list after that. But ones that people have been talking about are things like a carbon tax, which would be kind of the granddaddy of excise taxes, financial transactions tax. At the state level, you've seen various kinds of soda and sugar taxes that occasionally get discussed at the federal level. Marijuana taxes are an interesting thing these days at the state level, and so there's a lot percolating in that space. So even though excise taxes today are a relatively small share of federal revenues, there's actually a whole host of very interesting policy issues that surround them. Nicole asked me to just say a few things about how the revenue of excise taxes gets used, to provide some context on that side. And I would say there are a couple ways to frame that. So the first is just what happens when you open up the budget and you look at excise tax revenues. And you see there are basically two buckets. About 60% of excise tax revenues are earmarked to go into various trust funds. Again, the most famous ones are for highways and also for airways and airports. There are a whole host of smaller ones. There's a trust fund to compensate people who are harmed by vaccines. There's a trust fund to help coal miners who suffer from black lung, whole long list of those. Add those all up, that's about 60% of the revenue. And then the other 40% of the revenue, tobacco and alcohol being the most prominent, also along with various taxes that were enacted as part of health reform. This just goes into general government revenues and are used in the ways that revenues are used in general. So that's kind of like the budgeting framework for it. Now, but if you then step back and think about it from a kind of policy perspective, how does government think about using these revenues? How are they used when you and your bosses are enacting legislation? I think it's helpful to kind of put them in 4 different categories of how the revenue might be targeted. So the first is, and kind of the easy one, is just we're going to use the revenue for something good, but it is otherwise completely unrelated to the thing we're going to tax. So we're just raising some revenue. We're going to use it to reduce the deficit or to spend on completely unrelated spending or completely unrelated tax cuts. And I'll come back and give a concrete example of that. The rest of them all involve some way of linking the use of revenue to either what the excise tax is doing or what the point of the excise tax would be. And so one opportunity would be to use the revenue to reinforce the goal of what you're trying to accomplish with the excise tax. And here, let me start being concrete. So let's talk carbon tax. Again, carbon tax could potentially be, as big as all the other excise taxes combined. If you do any polling on this and you ask ordinary people on the street, we're going to do a carbon tax, what do you want us to use the revenue for? 70% of people say you ought to use it for something green, right? So invest in clean energy, something like that. So you can imagine levying that kind of tax, then using the revenue for something that kind of pushes in the same direction. What else can you do with it? Well, as Nicole was hinting at, right? Note that taxes do cause challenges and problems and put burdens on people, right? So you introduce a carbon tax, some folks are going to bear the burden of that. That might trouble you either politically or morally, and you may want to use some of the revenue to try to offset that. And so you might earmark some of the revenue, not necessarily earmark, but you might devote some of the revenue to tax credits for low-income families, for example, as a way to try to offset some of the harm they're bearing from the fact that their fuel bills and electricity bills are higher. You might devote some of the revenue to helping out coal communities, which if you enact a carbon tax will have a significant shock, will face significant economic challenges, and you might direct some of the revenue there. So again, that's an example. Levy and excise tax use some, not necessarily all, of the revenue to kind of offset the burdens that that tax is imposing. Again, you can do the thing where you're kind of complementing the effort by devoting it to green purposes. And then another use is to basically connect the revenues to whatever the harms are of the activity that you're taxing. And so in the carbon tax example, you might use some of the revenue to, build up the seashore, to promote adaptation, to do things to help society prepare to respond to the challenges of climate that are coming. Other existing examples I already gave, the vaccine fund. We know, unfortunately, that while vaccinations are by and large very, very safe and very, very successful for many diseases, there's a very small fraction of people who are hurt by them. And so we have this tax on vaccines that funds a trust fund that then is used to compensate folks who have those damages. And so again, the purpose of the tax is basically to kind of share that cost across everybody who's benefited by vaccines. Similarly with the tax on coal that funds the Black Lung Fund, the coal is creating this problem. The tax is basically a missing price that tries to capture that, and then you can use the money to help folks out. And so when you think about it kind of politically and we think about it from a policy point of view, those are different ways you might conceptualize how to use the revenue. And then the challenge, of course, is always how you're going to build a political coalition to get whatever excise tax enacted if you're in the mood for enacting an excise tax. Nicole framed, now switching from revenue to kind of the concept behind these taxes. Nicole emphasized what is, I think, the traditional economist view of the purpose of excise taxes, which is either to be the moral equivalent of a user fee or to internalize an externality, right? So in the carbon tax example, carbon tax would internalize the externality, the pollution, the damage that's caused potentially by global warming and climate change. There is another perspective on these taxes that's always been implicitly out there, particularly when these taxes are called sin taxes, that there's another kind of harm, that sometimes what's happening is that people are hurting themselves by their consumption choices, right? So if you drink too much, that creates health problems for you. If you smoke too much, that creates health problems for you. And that while sometimes those are framed in externality terms, drunk driving as being a problem with alcohol use, and the problem that tobacco use basically imposes healthcare costs, which then raise all of our insurance premiums, as being an externality associated with tobacco use. There's always been an undercurrent out there of, hey, aren't people making some mistakes and harming themselves? And over the last 15 years or so, as behavioral economics perspectives have grown in their resonance and economic community, there's been this rise of the idea that maybe we should also think about what are called internalities. The idea that people in their consumption choices may be imposing harms on themselves, hence internal, not external, but for some behavioral cognitive reason, they're not taking it into account when they make their consumption decisions, and that maybe an excise tax can lean against that. And the most prominent example of that in most debates around the US at the moment is this issue about taxing soda. I made a tactical error here by not grabbing a couple of sodas back there to hold up as props. But imagine I were holding up a can of regular Coke, which is full of sugar, and saying, this is bad for you. Now, everyone in this room knows that, but still there's a question about whether people are really fully taking account of that in their decisions about whether to drink it. And there's a very active debate at the state level in particular about whether and how you should design taxes in order to discourage that. And it raises all the same issues that Nicole kind of framed, which is people are different, they're different in their knowledge, they're different in how their bodies respond to sugar, they're different in what the rest of their diet looks like. And so designing an excise tax to really address internalities is fraught with imprecision. But it is a very active area of economic thought at the moment about whether that is an appropriate reason for levying excise taxes, and if so, how you would design them. Thanks.
Well, thank you very much. You guys, I think, did an outstanding job of kind of framing the excise tax conversation. What I'm going to do is actually talk about a few specific excise taxes that I think may be the topic of some legislative conversations in coming months, and in fact, already are part of certain pieces of legislation that have been kicked around Capitol Hill of late. I'll start with Obamacare taxes, and there are several excise taxes that were created as part of Obamacare. Two in particular, I think, are interesting, and in fact, were both included in the tax extenders bill that passed the House last year. That's the medical device tax and the tanning tax. The reason I think these are interesting to kind of juxtapose with one another is if you look at these through the lens of what excise taxes ought to be doing, as Nicole laid out, they're very, very different taxes. The tanning tax, for instance, you can say that there are externalities associated with tanning, that there are internalities associated with excessive tanning as well. If you go to the tanning booth too frequently, then you're subject to skin cancer and other health concerns that could be borne by a larger community and taxpayers. So the thought there could be sound tax policy. I'm a little cynical. I think pretty much all of the tax increases that were part of Obamacare were just to make budget math work, to get as much revenue in as possible. But you could make an argument that this is part of sound tax policy to tax tanning. We're going to reduce the behavior and put this money to better use. And in fact, when you look at the revenues that have come in versus expectations for tanning tax, you could make an argument that they've been effective. The expectation that JCT set forth was that we'd receive about $300 million a year from the tanning tax. In actuality, we've received about $100 million a year. So they've missed the mark very, very badly there. And I'm not just trying to beat up on JCT or our budget scorekeepers here on Capitol Hill. I think there are some other factors besides just the tax that went into this unexpected reduction in revenues actually collected here. Certainly there's some cultural trends. Sometimes tanning is very, very popular. Sometimes it's less so. You can make an argument that that's been the case. There's been some revenue collection issues with these small businesses that operate tanning salons. Maybe they're not familiar with the excise tax collection process and haven't been remitting their taxes as they should be doing. And then there's some loopholes that were created after the fact, the biggest one being the fact that tanning services provided at a gym or certain health spas are not taxed. They're not subject to this excise tax. So you could have seen behavioral shifting to these entities. So it's hard to know, but the fact of the matter is, here is an excise tax that, again, I think was probably designed primarily to get as much revenue in the door as possible. But you could make an argument was done for behavioral grounds, and if that is in fact the case, you could argue that it was successful there. Now, changing gears slightly to the medical device tax, I think it's really, really hard to look at that and say that it was based upon sound tax policy. Are we trying to discourage people from using or producing medical devices? I don't get it. If somebody needs a pacemaker, I hope they get that pacemaker and are not discouraged from doing so because of 2.3% tax. That doesn't seem to make much sense to me. And so I think the policy justification there, it's pretty easy to be cynical about it. It was clearly to get a lot of revenue in the door, and I think that's one of the reasons why Congress has been successful in suspending this tax. It's not currently on the books. It's been included in some extenders packages extending the suspension of the tax. And in my opinion, it should just be eliminated altogether. The only argument against doing that, in my opinion, is that there would be a larger deficit implication. But that's a legitimate objection. But I don't think the tax serves any real purpose. And this process of extending suspension of the tax is pretty bad tax policy. It just makes it very difficult for producers of these devices to plan, for consumers like hospitals that need to constantly have cutting-edge technological products on hand. It makes it harder for them to plan on a budgetary basis, harder for them to know what the tax situation will be down the road. As it stands now, the current suspension of the medical device tax is scheduled to expire at the end of this year. And who knows how the extenders process will play out. Maybe you guys know better than I do, but to me it seems like a pretty big mystery. And then just real quick, I'll note that there are very tangible costs associated with it. The medical device tax was on the books for 2013 to 2015, and during that time, research suggests that there was a significant reduction in R&D to the tune of $34 million, and estimates suggest just under 22,000 jobs lost due to that tax. So it is kind of a big deal, and it's hopefully something that Congress will not just suspend, but go ahead and eliminate when they tackle tax policy in coming months. Now I'm going to shift gears a little bit and talk about another excise tax that both Donald and Nicole touched on, and that is alcohol tax, because it's Friday afternoon, and instead of a happy hour, we're just going to talk about alcohol. But there has been a proposal floating around for a long time called the Craft Beverage Modernization and Tax Reform Act. And it's taken on various iterations over the years. It was, as many of you know, included in the TCJA, the Tax Cuts and Jobs Act of 2017, kind of a 11th hour addition to the bill. The history behind it, I won't get into too much detail, is pretty fascinating because you think, hey, here's a thing that's beneficial to the alcohol industry, that's cool, whatever. But there's a lot of internal politics within the alcohol industry, I can tell you that. It's not just beer fighting wine, fighting spirits. It's big producers versus small producers. It's producers versus retailers versus wholesalers. The fact that they were able to eventually put together a proposal that provided excise tax relief that had the virtually unanimous support of the entire alcohol industry was nothing short of a miracle. And it was a miracle evidenced by the fact that it had a tremendous base of support here on Capitol Hill. The co-sponsor list is very, very long. In fact, the bill to make permanent the 2-year excise tax reductions that were in TCJA has, I wrote it down, 236 House co-sponsors and 64 Senate co-sponsors. That's a great show of bipartisan in a time of very little bipartisanship here on Capitol Hill. And it's, in my estimation, been a very important piece of tax legislation. It's not just a matter of helping the alcohol industry here at a time where we've got plenty of priorities to deal with. But I think in the context of what's happening on the trade front, I think there have been very few industries that have been hit quite as hard as the alcohol industry. You can look at aluminum taxes, 10% increase in aluminum imports. Beer, the number one input for the beer industry is aluminum. That might be counterintuitive. We think of grain and hops, and certainly a lot of beer is bottled, not canned, but aluminum is the number one input cost. So when you increase that by 10%, you're having a big impact on the industry. And it's not just beer. If you go to a winery, if you go to a distillery, you'll see huge stainless steel vats, 25% increase in the cost, or the tariff associated with the 25% tariff, I should say, on imported steel has a great impact if you're looking to replace vats, if you're looking to expand your operations or start a new brewery, winery, or distillery. It's tremendously impactful to the industry. And that's not even getting into the retaliatory tariffs that we've seen on a number of products that's really hit the bourbon industry particularly hard, which has probably grounded a lot in politics, since the Senate Majority Leader's state is the number one producer of bourbon in the world. So has this been a huge gift to the alcohol industry? I would say no. I think it's helped them tread water at a very difficult time. And the alcohol industry, if you look, even with these excise tax reductions, they're faring decently well. Beer consumption's down a little bit since the tax reductions have taken place. Both wine and spirits are up slightly. And then if you look on the revenue side, the excise taxes collected have not really been to the level, the reductions have not been to the level that JCT predicted. And there are a number of confounding factors here, but if you do a back of the envelope calculation, revenue in 2018 was down only about 532 million, when the expectation was the Treasury would take about a $1.6 billion hit, so much less than expected. Again, there are a number of asterisks that need to go into those numbers. They're very much back of the envelope, and there have been questions about how to handle imports. So imports of alcoholic products will eventually get a rebate, but right now the rulemaking has not been finalized for those products. So again, a lot of asterisks there. But I would argue that the revenue implications have not really been as significant as JCT expected, and yet the benefits to the industry have been very real and very much needed at a time of great uncertainty. And I could talk another 20, 30 minutes on alcohol policy, especially over a beer. I didn't see any back there. Maybe I missed them. But I'll go ahead and conclude my remarks there, and happy to talk more in the Q&A session.
Thanks so much, Brandon. So I'm going to kick off the Q&A with a question to Nicole and Donald. So you both talked about the various impacts that these policies can have, and you look at the landscape of U.S. federal policy, and then you start thinking about how some of the states around the country or localities around the country have been implementing different excise taxes, either on sugary beverages or on plastic bags. As you look at the way these states or localities have done these policies, what are some lessons that federal policymakers might be able to take away? I'll start with Nicole and then Donald.
Yeah, thank you, Daniel. So let's actually talk about an example that Donald brought up, which is the tax on sugary beverages. So for those that don't know me, I'm just going to tell you right now that I drink a lot of Diet Coke. I drink an absurd amount of Diet Coke every day. So this is an issue that I care a lot about, particularly because, right, I talked about this idea, and Donald talked about this as well, is that excise taxes are thought of in this version of externalities or internalities, right? So there's some theoretically, perhaps there is some sort of social cost to drinking a sugary beverage, and there is an internality to drinking a sugary beverage that there is a correlation between sugar consumption and obesity. And there have been a lot of states that have been having this debate about sugary beverages, but I think there's some flaws to the way that these debates have been manifesting at the state level. So the first is, there are many ways to ingest sugar that are not soda. So that kind of raises a question here, right? If the goal is that we're trying to reduce the consumption of sugar, why tax just one embodiment of sugar consumption? The second is, often these taxes have hit way more than sugary soda. They tax diet soda, which doesn't contain any sugar. According to the back here, there is 0 grams of sugar in my Diet Coke that I drink by the gallon. They've also applied to other sorts of things, like bottled water that perhaps has like a little bit of a flavor additive with no sugar. So there have been some issues there where they're applying them to all sorts of a product class instead of actually the sugary one. There's a difference in sugar consumption between a Coke and a Diet Coke. The other issue, and I kind of alluded to this, is that they've been doing this as a way to pay for new programs. And I think that's probably not the best way to spend the money if you decide to have a soda tax. So this argument that Donna was making, that there's a lot of precedent to assessing a tax on some sort of good and then using that revenue to remediate the cost to that. So it'd be one thing if perhaps we're going to have a tax on sugary beverages and we're then going to use all of that money to fund education programs about the risks caused by ingesting too much sugar. Or we're going to talk about, perhaps we're going to provide dieting services, or we're going to fund some sort of programs in those kind of ways. In Philly, they used it to pay for, the original proposal was used to pay for universal pre-K. There have been other proposals to use the revenue in that sort of sense. And I think there's just this mismatch in between using the revenue of the excise tax and then what the idea for the excise tax is. And I kind of mentioned this, but I think it's very difficult to structure the funding of a long-term government program tied to a revenue source that hopefully will start to decrease over time. I think that creates a lot of budgeting issues for a state and locality, where those issues are even more attuned than they are at the federal level because they have to balance their budgets, unlike the federal government, which can run deficits. So that's a really unique challenge that those governmental entities face that the federal government doesn't.
Donald?
Sure. So a couple of things. So the first, one lesson from particularly the local taxes on sugary drinks is that it's a tough way to tax things if you're trying to accomplish a policy goal, because people can move across borders. And so, for example, you see that the evidence suggests that's been happening around Philadelphia, for example. And so, if you're of the view that it's desirable to do these kind of taxes, there's a lot to be said for doing them in a larger geographic area, right? So states better than localities, federal government better than states. Again, if you want to do this, because you can eliminate some of this unnecessary gaming that happens around borders. I would say, I view kind of the state and local efforts as sort of the classic laboratories of democracy. Let's see how people approach this, see what we can learn from it. And I think a very important issue that's raised both by efforts to tax marijuana, so I will confess I'm not a marijuana user, and a little weak on exactly the issues, but there are a whole host of very interesting design issues about, okay, you're taxing marijuana, what exactly do you want to tax? Is it potency? Is it some measure of amount? How do you feel about brownies? How do you feel about, it's like there's a whole host which you can kind of laugh about, but like they're actually really, really important if you're trying to accomplish some policy goal. And oversimplifying dramatically, your two policy goals are roughly raise revenue in an efficient manner and accomplish some public health oriented related thing. And I would just say that it's really important to think about which goal you're trying to accomplish and to think about how you can calibrate your tax to accomplish that. So again, I know that's true in marijuana world, but I don't actually understand it. But over in sugary and less sugary drink world, which I do understand, a classic example of this is, okay, what's your goal? Is your goal to raise revenue or is your goal to reduce sugar consumption? If your goal is to raise revenue, which seemed to be the primary goal in Philadelphia, although it was dressed up with a little bit in public health, taxing the Diet Coke over there is great. Because a fundamental principle of taxes is that if you're trying to raise revenue with something that looks like an excise tax, a broader base is good, because it lets you do it with a lower rate for whatever your revenue goal is, and you're gonna get less distortions, right? Because in that world, you're not trying to change people's behavior, you're just trying to get the money. And so a broader base is fine if that's your goal from a revenue point of view. Now you might ask why you stop with soda, because that logic, this is the logic that leads to sales taxes that apply to everything. If your goal though is to change behavior, and if you think sugar is particularly bad, and then there's a permutation of this that applies to cigarettes versus vaping as well, there's a really strong argument to be made for trying to calibrate your tax so that it penalizes high sugar things more than low sugar things. And then there are two reasons for that. And so I should just emphasize, there are a whole host of products in between the highest, anyone know what the highest sugar products are that people typically buy? It's not Coke. So it turns out your cranberry grape cocktail kind of drinks in so much sugar. Read the label. So if you go from that kind of through Coke down to the Diet Coke, there's a whole spectrum of different sugar levels in drinks. And so if you're worried about sugar, you should think about calibrating your tax to that. And the United Kingdom is doing that. South Africa is doing that. Like there's a lot you can do there to say, you know what? We're going to penalize, we're going to tax more of the high sugar things and less the low sugar things. And the beauty of doing that, rather than just taxing per ounce, which has been the general approach taken here in the US, is that first you're giving consumers a signal to shift towards lower sugar, right? So to the extent that the tax gets passed through into price, the person who's buying Honest Tea, which has about a third typically of the sugar and then it's in a Coke, owned by the same company by the way, but different products, you'll have an incentive to shift down to the lower sugar things. But in addition, you also create a second incentive, which is you create an incentive for suppliers to change the composition of what they're offering the market. And so you've seen that some other countries where, it turns out the formula for various sodas is not identical from country to country, and in response to sugar initiatives or anti-sugar initiatives, it is possible to recalibrate your formulas to lower sugar ones. If you're just taxing the way most states and most localities do in the US at the moment, where it's just a tax per ounce, you're not getting that kind of response. Which again, if your goal is really to reduce sugar, is a shame, because there's no reason to put all the burden on consumers to change their behavior. In fact, it may be much easier for suppliers to do it. It's hard for localities or even most states to have enough leverage for that to happen. But again, kind of going back to it, I think the lesson of how our localities have been approaching this issue thus far is that it's a very imperfect way to do it if you think reducing sugar consumption is the actual goal. And then if you thought about it from the federal level, you would design these things in a quite different way.
Thank you. Brandon, did you have something to add?
Yeah, I just wanted to touch on that because I think that behavioral response was a big factor in the consideration of the alcohol tax reductions in TCJA. In fact, there was a study that came out of the Brookings Institution just right when it was announced, or shortly thereafter it was announced that that provision would be included in the bill, that suggested there would be 3,100 deaths associated with those excise tax reductions. And I'm not a big fake news media conspiracy guy, but if you want to get a lot of headlines, if you can connect the policies of Donald Trump to the death of innocent civilians, you will likely get a lot of media headlines. And certainly that was the case. This story was picked up in Vox, in Washington Post, and so forth. I think it was tremendously flawed from a methodological perspective. And one of the biggest factors here is the question of how much did excise tax reductions actually reach the consumer? Very few people were arguing that would in fact be the case. But even beyond that, there are questions about demand elasticity for alcoholic products. So what research has shown this time and time again, if you increase the price of alcohol, or in this case, decrease the price of alcohol, you're not going to see necessarily a flood across the board of behavioral response. most people do have some sense of price sensitivity, but those tend to be the casual, lighter drinkers. So if the price of alcohol goes down a little bit, maybe they'll have 2 beers at dinner instead of 1 beer at dinner. If it goes up a little bit, maybe they have 1 glass of wine instead of 2 glasses of wine. The people that are priced where there's demand inelasticity are the heavy consumers. They're going to drink regardless of the cost. They may change the product that they consume, but they're still going to drink heavily because there's an addiction component to that. And of course, this is the sector of society that tends to have the most illnesses and diseases related to alcohol. So liver diseases and so forth, and require a disproportionate amount of medical treatment, addiction-related treatment, and are frankly more likely to get behind the wheel of an automobile after consuming too much alcohol. So this is really the community that you want to address from a public policy perspective, that you want to be more concerned about, but they are actually least affected by price changes that are related to excise taxes.
And that's a good segue to a point I was thinking about as you were discussing these various excise taxes is, all of us here at this table work on tax policy, but I think we would all agree that not every problem is a tax problem. And sometimes policymakers' toolkit relies a little too heavily on tax in some instances when other regulatory or different options might be better suited to address a particular problem. And with that, I'm going to open up the floor to questions. Please identify yourself and your office or your organization, and please ask questions rather than make statements. Anyone? Well, I have another question. So there's this campaign going on right now. Some people are running for something, and taxes come up a little bit. But Donald, this might be a good question for you. How much do you expect excise tax policy, potentially even carbon tax, to be part of the Democratic presidential debate over the next year or so?
Well, so we've clearly seen financial transactions tax come
Yes,
up in a couple of discussions. Again, it's kind of, analytically a very interesting thing to think about how you would design one, what things you want to tax, what the goal of it is. If you think there's an externality there, what exactly is the externality of financial trading, and how would you align tax to address that? Obviously carbon policy and climate policy is a big thing at the moment. So I will confess I'm not familiar with the details of all 20X campaigns. However, the general vibe I get is that there has been generally a reluctance to embrace carbon tax, at least this point, but a lot of discussion about the need to do something. I expect we'll see that focus a little bit as the conversation goes on, and that carbon tax will be in that debate. Off the top of my head, I'm trying to remember. Are there any other ones? You guys will know. Are there any other excise tax things out there part of the campaign?
I actually can't think of any. I'm sure there are, but I'm surprised there's 50 people in this room because they're not all running for president right now. But I actually was looking at the list yesterday, and I don't think I saw an excise tax other than carbon and FTT.
Brandon, there's always another fiscal deadline in Congress. Whether it's the debt ceiling or funding or end of year extenders. What over the next 6 months or even the next couple weeks should folks on the Hill, policymakers, be thinking about as far as what could get lumped into a fiscal discussion that's also excise tax policy? You mentioned some expirations, but interested in your broader perspective on what's upcoming.
Sure, I think that's a good question, because the fact of the matter is we're probably not going to see this Congress get a ton of bills to the president's desk. They're going to be primarily must-pass pieces of legislation. And now that the debt ceiling timeline has shifted a little bit, there's quite possible that we see something here before the August recess. I confess, though, I think it'd be surprising if any excise tax components were included in that. There could certainly be some other reforms, as we've seen in the past. Republicans have often made fiscal demands to go along with a debt ceiling increase, and that could certainly be the case once again. But I think the excise tax questions, extenders, and so forth, there'll probably be a latter part of the year conversation, and who knows what kind of retroactivity or whatever may enter the conversation as well. So I think that's a long time horizon conversation, and then with next year being an election year, that might in fact accelerate things into December rather than letting it slide further, just because I think with 25% of the Congress running for president, it makes it tougher to keep those folks around for votes.
I think that this highlights one of the other issues that I think about a lot when it comes to excise taxation, and that is the lack of permanence here. That we're talking about, in particular, two of them, med device and alcohol, that we don't actually know on January 1 what the tax treatment of those products will be. I think that's a problem. I think it's a problem in terms of the burden that it puts on the producers. I think there's a burden in terms of what it puts on the revenue collectors. I think that's a burden in a lot of different ways. And I think that, even in the, talk about alcohol that was in the most recent bill that just got voted out of Ways and Means, it was only a couple years, right? I mean, we're talking about tax policy really in fits and starts right now. In excise tax and in other spaces as well. But if the goal is really to work through the remediation of all of these various internalities and externalities, permanence is a key part of that. And so I would really encourage folks here in these buildings to give some sort of certainty here. Really, we should be trying to make these provisions permanent, or in the case of med device, I agree with Brandon, I think we should get rid of it. I think that we need to give some sort of certainty to these folks in terms of how we're going to tax these products.
If I could just build on that, again, going back to carbon tax, I think this point about permanence is particularly important, that if you're worried about climate change and if you think a carbon tax is an important way to address it, the way a carbon tax helps you address it is by being out there persistently for decades, and you would like people to expect that it's going to be persistently out there for decades. And so then that creates a very interesting question of political economy, which is that if you believe what I just said, the goal is not just to enact a carbon tax, the goal is to enact a carbon tax that's highly likely to persist over time. And then that creates a question of how on earth you do that. Because we do have observations from around the world of carbon taxes and similar policies being repealed when you have a change in government. Something like that happened in Australia, something like that's happened in a couple Canadian provinces. And so if you're a pro-carbon tax person, I would strongly recommend you give a lot of thought to how do you make the carbon tax attractive and persistent over time. There's a group of people whose view is that the way you do that is that you link the use of the revenue of the carbon tax to a dividend, so that everybody in America, kind of a debate about who everyone is, but essentially everyone in America would get money back that's funded by the carbon tax. So you'd have a trust fund, the money goes in, after some administrative stuff, the money comes out to everybody getting the same check. And one of the arguments for doing it that way is that you then create a constituency that is fond of the tax, and that if 3 years later there's a change in government and someone wants to repeal the tax, they're going to be simultaneously in the position of repealing the dividend, which many Americans will have become attached to. You may have your view about whether that's a good thing, bad thing. We could have a long conversation about that. I think that's a very interesting hypothesis, however, about how you might think about a tax policy if your goal is to make it persistent, and whether there are ways to build through the use of the revenue something that's going to make it harder to repeal down the road.
So what I hear is you want to create another Farm Bill SNAP coalition, except one half of it is, revenue and the other half of it is spending, but on a permanent basis, so that there isn't this, cycle of, review or whatever.
Yeah, something like that.
Right. Any questions? Yes.
I have a question.
Yes.
Just Mike at the Stand Center. The last time the gas tax was raised was 1992, which is the same year that the tank ban released ended the 36 chambers. And that has caused, meanwhile spending has gone up with inflation and other maintenance issues for highways, which should cause like persistent shortfalls. So when you look at excise taxes from a user fee perspective, what kind of design considerations come into play that can help avoid some of those problems?
Yeah, so I think there's a couple. So one is, and I think this is one of the challenges that policymakers are going to confront when it comes to the gas tax in the not so distant future, is how do you handle improving gas efficiency of cars? Because yes, there are issues we've not raised it since '93. States have not raised it, though actually a number of states raised their gas taxes this session, which is noteworthy. There's issues in terms of it not being adjusted for inflation, right? There's those kind of concerns, but the fuel efficiency is also a very large concern to that. So I think there's obviously states, again, this laboratories of democracy idea, they've been experimenting here. So there's been the Oregon example of trying to do a vehicle miles traveled tax. There are questions there about how do you track vehicles miles within a state versus outside of a state. There's obviously some folks that have privacy concerns. Do you put a GPS tracker in everyone's car, and that's how we distribute that? I think that makes some folks have some concerns. States, the other idea that states have really had is to just assess fees on hybrid vehicles and electric vehicles. They will say, you have $100 a year fee, which is trying to approximate the gas consumption that they're not having. I think that we are ripe at the federal level for a debate about how we fund highways, how we fund how the gas tax should be changed. I think there's a lot of that. Obviously, there's some issues with the Highway Trust Fund, I believe in 2020 or 2021. And so I think we're going to have another one of these conversations, but there is obviously a lot of issues with the current federal gas tax as it's structured.
Other questions? Yes, red tie.
So I'm Travis Nix with the Heritage Foundation. In regards to the extenders package, do you think that the craft beverage excise tax credits outweigh all the bad stuff in the extenders package, or should we just let these tax credits expire as well?
Brandon?
That's a tough question. Optimal tax policy would be to evaluate each and every extender on a case-by-case basis. And I think some certainly do not deserve to be renewed and others do. I mean, I'm in favor of cost recovery provisions by and large. I think those are important even when there's some TCJA overlap. I'm certainly, as you've probably picked up on, supportive of the craft beverage provision. I don't know. That'd be a tough judgment call looking at the total package. I'd need to think on that. So I'm going to weasel out of this one and say I don't know. But I'll say as a matter of tax policy, this extenders is an extraordinarily lousy way to go about providing certainty on a year-by-year basis. It's a really nonsensical process. And while I was glad to some extent to see Chairman Neal include the craft beverage provision in extenders, I'm really disappointed at the same time because I think it does stand on its own. The fact that it has as many co-sponsors as it does suggests that it stands on its own. And to wrap it up with these other provisions, some not so meritorious in nature, is a little disappointing.
Another question? Yes.
We have weighed in at National Taxpayers Union a little bit in opposition to opioid tax, and it's obviously an incredibly serious problem. I don't mean to make light of it in any sense of the word, but the fact is that a tax on opioids I don't think is effective in reducing opioid abuse. To me, it seems, I don't want to be too cynical here, but it seems like a revenue grab taking advantage of a very, very serious public policy problem. So 100% concerned about the issue. I just don't see this as solving. I mean, you're talking about, again, I was mentioning elasticity, like people that are addicted are going to find a way. We have to treat this problem in other manners than simply slapping a tax on it.
So I've just done some back of the envelope thinking about that, so nothing published on that. And it just, the thing that leapt out at me from, again, just kind of the initial look at it is you have this challenge that a bunch of opioid use is good and a bunch of it is bad. And if your policy is going to hit both of those, you've really got a problem. Because really what you want to do is have some mechanism that can isolate out the bad uses of it and discourage them. And it's not obvious to me as I sit here that you're going to be able to structure a tax policy that does that. I'm open to that, but at the level of discussion I've seen thus far, I really worry that you really don't want to discourage the good uses as part of this policy.
Yes.
My name is Liam Black with Senator Gardner. Where do you see the role of excise taxes in the financial markets, specifically like the equities and futures, as well as risky loans?
So I think Donald kind of mentioned this a little bit, and I'm curious to get his responses. I'm very skeptical about the idea of introducing a financial transactions tax. I think there's a few reasons. So one, the argument that's made, there's basically three arguments made as to why you should create one. So the first one is that there's some sort of societal cost to concentrated inequity, right? Concentration of wealth. So the financial transactions tax are designed to break that up. The second is that there's some sort of externality or some sort of economic harm to volatility. The third is that it's just a place to raise a lot of revenue. It kind of, first they go to this idea of, it sounds good, a 0.1% tax. Donald was talking about how as economists we really like low rates and broad bases. Absolutely. However, there's a big asterisk on that sort of policy, and that is that if you have a tax that generates $800 billion over a decade and the rate is only 0.1, that tells you the tax base is much, much too big. You should not be able to do that. And the reason why it's too big is because it's taxing the same transaction dozens, perhaps hundreds of times, right? So imagine that I own $100 in stock. I am going to sell my $100 in stock, perhaps because I just want to diversify my portfolio. You can imagine how that $100 is going to get hit many, many times. The other issue is in terms of this volatility. There's actually some research, there's actually a great study coming out of the Bank of Canada in 2012, 2013, that actually says when they looked at the economic literature, they found that there's really not a lot of evidence that it has decreased volatility. And it gets back to this argument about what do you mean by volatility? Because, perhaps you could argue that there is a societal harm to high frequency trading. That's very different than the example of if I sell a share of stock because I'm just diversifying my portfolio every year as part of my saving for retirement. So how do you differentiate between those activities becomes a very large challenge, I think, with that. And I think if the goal is growing inequity, there's probably better ways that we could, look at taxes on high income or wealthy individuals and not go in this direction. I'm pretty skeptical that this is the linchpin to making all of that work.
Yeah, so just building on that, this is a little bit of a cousin to the opioid problem in that there's plenty of trading that is innocuous. There's plenty of trading that's good. There's potentially some trading that's bad. It's a little hard to actually pin down what the externality is that you're trying to address related to trading per se. There's a whole bunch of stuff in the financial sector that is problematic. And kind of consistent with what I said before, my starting view is that you ought to identify the problematic conduct and figure out the best way to address it. So higher bank capital standards, those kinds of things in order to build a strong and resilient financial system. And that I haven't yet seen the compelling case that trading is a large part of that. Again, it was kind of this point, if you view it as a way to try to raise revenue from some folks who you feel like ought to contribute more revenue to society, my temptation would be to try to design taxes that do that a different way. Choose an example, right? So suppose you're concerned about Jeff Bezos, who's worried some astronomical, many-digit long amount of money. He isn't trading every day, right? It's just, if you're worried about the amount of wealth that he's accumulated, most of it is just sitting there quietly in Amazon stock. And if your concern is about collecting something from him. Some other kind of tax, whether it's an income tax or a wealth tax or whatever, is going to be a much more direct way to accomplish what you want to do, and is pretty much unrelated to trading.
We'll take one last question. Yes?
Could you elaborate a little bit more on the arguments for and against the medical device tax and maybe discuss any policy solutions and taxes eliminated?
I mean, the arguments for it were, again, I'm being cynical, I think it was just to get revenue, but the stated arguments were basically that because there'd be more healthcare utilization, the medical device industry would profit, and because we need to make the budget math work, we're going to claw a little bit of those profits back. I think I'm trying to represent my political opponent's views as best I can. I think that's a decent approximation of where they stood. But in terms of like the impact of the tax, as I said, I think it's been largely negative. I don't think there's any kind of Pigouvian component to a medical device tax. So I just don't think there's a whole lot of policy justification there. It violates virtually every principle of sound taxation. It's a tax that discriminates against lower margin producers quite a bit because it's based on receipts, not on profit margins. So it's just a poorly structured tax. I don't see how it's a salvageable public policy. I think it should just be eliminated, and maybe I'm not being charitable enough to people that support it, but I just think it should be scrapped entirely.
And I'll note that on med device repeal, similar to Craft Bev, it is bipartisan, right? There are a couple hundred in the House. There are many, many senators that support the repeal. I think the challenge has been largely budgetary as to why it's not completely been repealed. It's just been the suspension every 2 years or so. But there is a lot of bipartisan support getting rid of it, largely because of this issue of the fact that it's a tax on gross receipts and not on income. And so there's no accounting for the cost of producing the medical device in there. And so you have these issues in terms of non-neutrality across the various types of medical devices. Some of them have much higher profit margins than others. This tax is indiscriminate to that. And so I think that there will be a lot of support to continue to suspend it. The big question is for how long? And repeal, I think it's just a budgetary challenge at this point of how do you replace the revenue with repealing it over a full decade.
Well, thank you so much for coming once again. And if you could join me in thanking our panelists. And have a great afternoon.